The house was already quiet by the time the payment cleared, and nothing about the evening felt different. Dinner had been put away, the dishwasher was running, the lights in the hallway were still on longer than usual. It was an ordinary weekday night, the kind that blends into the next one without much distinction. The payment notification didn't bring relief or stress. It just arrived, like it had every month before, only smaller than it used to be. At the time, the smaller number felt like breathing room. Not excitement, not celebration, just space. The mortgage had been stretched back out, the years reset, the monthly amount lowered to something that fit more cleanly into the household budget. The paperwork had been signed weeks earlier, then mostly forgotten. Life had continued exactly as it had been. Same job, same commute, same grocery trips, same routines. The decision hadn't felt dramatic when it was made. It looked practical on paper. The interest rate was lower than before. The payment was easier to carry. The household income hadn't changed, but expenses had crept upward in small, unremarkable ways. Insurance premiums had gone up. Property taxes had been reassessed. One of the cars was aging into more frequent repairs. Nothing was breaking, but nothing was getting cheaper either. Extending the mortgage term made the math work again. The numbers lined up neatly. The household could cover everything without shifting money around at the end of the month. There was less of that quiet calculation while standing in line at the grocery store, less checking the account balance before scheduling routine appointments. It restored a sense of stability that had felt slightly strained. For a while, that stability held. Months passed without incident. The house aged gently, the way houses do. Minor repairs were handled. Lawn care came and went with the seasons. The payment continued to clear, reliably and quietly. The mortgage balance moved downward, slowly, almost imperceptibly. No one was watching it closely. Years later, the calendar told a different story than the payment did. The original loan would have been nearing its end. Friends and coworkers mentioned being close to paying off their homes, or already having done so. The conversations were casual, not bragging, just observations shared over lunch or during neighborhood gatherings. It was only then that the math resurfaced, uninvited. The mortgage statement showed decades remaining. The lower payment had extended the timeline far beyond what had once been planned. The balance was lower than it had been years earlier, but not low enough to feel finished. The end was distant again, placed firmly into a future that belonged to a different version of the household. At the time of the refinance, the household had assumed income would continue steadily. Work had been stable then, benefits were solid, raises had arrived regularly enough to feel dependable. There had been no reason to imagine a different outcome. The extension wasn't meant to be permanent, it was just supposed to smooth things out. But time doesn't pause for financial convenience. Jobs changed. A promotion came with longer hours and more responsibility, but not the kind of income jump that shortened timelines. Later, a role was eliminated and replaced with something similar but less secure. The mortgage payment stayed manageable, but the sense of progress toward being done faded. The house itself didn't change much. It remained the same size, the same layout, the same neighborhood. It still held the same memories accumulated year by year: holidays, arguments, repairs, ordinary mornings. The mortgage extension didn't affect how the house felt to live in. It only affected how long it would be financially tied to the household. By the time children grew older, the mortgage was still there, steady and unresolved. College conversations surfaced, not as plans, but as acknowledgments. Tuition numbers were discussed carefully, alongside retirement contributions and medical expenses. The mortgage, once expected to be nearly gone by this stage, was still one of the largest fixed costs in the budget. The lower payment had helped during earlier years. That part was real. It had prevented stress when expenses overlapped and income felt tight. It had allowed the household to stay in the home without cutting back sharply elsewhere. But it had also delayed the moment when the house would belong fully to the people living in it. As careers advanced and then plateaued, the mortgage remained unchanged. The balance declined slowly, but the remaining years stayed long. The household noticed this most when running long-term projections for retirement. The idea of carrying a mortgage into those years had once seemed unlikely. Now it was simply part of the picture. There was no single moment when regret arrived, no clear point of realization. Instead, it showed up gradually, in side-by-side comparisons with an earlier version of the plan. The original payoff date had passed quietly, unnoticed at first. The day came and went without ceremony because there was nothing to mark it. Payments continued as usual. The interest paid over the extended years accumulated quietly as well. It wasn't experienced as a loss, just as part of the ongoing cost of housing. Each statement listed it plainly, without commentary. The household didn't dwell on it. There was always something else demanding attention. Maintenance costs increased as the house aged. Roof repairs, appliance replacements, updates that weren't upgrades so much as necessities. These expenses layered on top of the mortgage, not replacing it. The extended term meant these costs overlapped with a debt that was supposed to be winding down. At work, conversations shifted from growth to endurance. Fewer people talked about advancement, more talked about holding on. The mortgage payment, though lower than it once was, now felt heavier in a different way. It represented an obligation that would last longer than originally expected, extending into years that felt less predictable. Health insurance changed. Deductibles rose. Medical bills became part of the budget in ways they hadn't been before. The lower mortgage payment no longer felt like a cushion. It was simply the baseline, one of many fixed expenses that couldn't be easily adjusted. The house remained a constant presence. It still felt like home. The refinance hadn't changed that. What it changed was the timeline attached to it. The idea of owning the home outright, once tied to a specific age or milestone, had drifted into abstraction. As retirement conversations became more concrete, the mortgage showed up again, this time in planning documents and spreadsheets. The remaining balance was manageable but persistent. It shaped choices indirectly, narrowing options without explicitly forbidding them. Looking back, the refinance didn't feel like a mistake in isolation. It had solved a real problem at the time. It had aligned the monthly payment with the household's immediate reality. The cost was not immediate or dramatic. It was stretched thin across years, almost invisible in any single moment. The extended term became normal. New statements replaced old ones. The remaining years ticked down slowly. There was no crisis attached to it, no urgency, just continuity. Neighbors moved, the neighborhood changed incrementally. New families arrived, others left. The house stayed put, anchored by the same mortgage, now older than some of the relationships formed within its walls. The household adjusted its expectations without formally acknowledging the shift. Paying off the mortgage before retirement was no longer assumed. It was something that might happen, depending on circumstances, or it might not. When income increased modestly, the extra money went to rising costs elsewhere: insurance, utilities, transportation. The mortgage payment stayed the same, not shrinking, not growing, just present. There was a subtle difference between relief and progress, and the refinance had provided the former while postponing the latter. Relief is felt immediately. Progress is only recognized later, often in its absence. The mortgage extension didn't announce its long-term cost. It revealed it gradually, through unchanged statements and moving goalposts. By the time the impact was clear, it was already embedded into the household's financial structure. The house continued to hold everyday life without comment. Morning routines, evening fatigue, weekends filled with chores and rest. The mortgage was part of that backdrop, steady and unresolved. No one talked about the refinance anymore. It had become history. What remained was the reality it created, lived in quietly month after month without resolution.